ZBCN is sitting inside a textbook bullish pennant right now, and if this thing confirms, we're looking at a potential 163% measured move toward 1 cent. But before you start calculating your exit liquidity, there's a twist. ZEBEC just landed on Kraken. The beta for their telecom payments network is live, and they're running a card-linked buyback that ties directly to real transaction volume. So the question isn't just if this breaks out, it's whether the fundamentals can actually back it up this time. And honestly, the setup is way more interesting than most people realize. What's up everyone? Welcome back to the channel. If you're new here, hit that subscribe button and smash the like. It helps the algorithm push this to more traders who need to see what's brewing with altcoins right now. We're diving into Zebec Network today, and trust me, this one's got layers. Let's get into it. Zebec Network isn't your typical DeFi protocol chasing TVL or another layer 1 promising to flip Ethereum by Tuesday. This project is building real-time payment infrastructure. Think streaming payroll, automated transfers, and debit card spending, all while integrating telecom access through decentralized eSIMs. According to the team's recent updates, they launched the ZebecNET beta in October, partnering with World Mobile to roll out this hybrid telecom finance stack market by market. They're not flipping a switch globally, they're stress testing connectivity, identity verification, and spending features region by region before scaling wider. And here's where it gets spicy. Kraken listed ZBCN on October 15th. So, here's the deal. Kraken is a regulated U.S. exchange with fiat on-ramps, institutional custody, and order book infrastructure. For a project that's been grinding away on product development instead of hype cycles, that's a massive distribution unlock, right? U.S. retail can now onboard without hopping through DEX or cross-chain bridges, and institutions get a cleaner entry point if they're eyeing payroll or card integrations. And hey, on top of that, ZEBEC's running a card-linked buyback program. Okay, let's break it down. Every month, a chunk of revenue from ZEBEC card transactions goes straight into open market token repurchases. It's not discretionary, it's automatic, driven by actual usage. So, the more people swipe, the more tokens get bought back. Pretty straightforward, huh? Now, that's a treasury mechanism tied to product performance, not speculative pump announcements. And with ZebecNET expanding, that revenue stream could scale faster than most people expect. Now, all of that sounds great on paper, but here's the tension. None of it matters if the chart doesn't cooperate. And right now, ZBCN is coiling inside a bullish pennant pattern, sitting just above the 50-day exponential moving average. So, yeah, it's a bit of a waiting game. So, the price has been compressing since September, forming higher lows along a rising support line, while sellers keep capping rallies along a descending resistance line. It's a classic consolidation after a sharp summer rally, and honestly, it's tightening every single day. A bullish pennant is a continuation pattern. When it breaks out, traders use the length of the prior impulse move to project the next leg up. In this case, if ZBCN breaks above the upper trend line with volume confirmation, the measured move targets roughly $0.01019. That's a 163% gain from current levels. But, and this is critical, the breakout hasn't happened yet. We're still inside the pattern, and until we see a decisive daily close above resistance with expanding volume, this remains potential, not confirmation. Adding to the uncertainty, the 14-day RSI is currently sitting at 44.8, below the neutral 50 mark. The RSI signal line is hovering around 50.1, which means momentum is soft. We've seen lower RSI highs since early October, which reinforces a mild bearish bias in the short term. The oscillator isn't oversold, it's just meh, balanced, boring, and that's dangerous because it means we could break either direction depending on the next catalyst. If the RSI reclaims 50 and crosses above its signal line, that's your early warning that buyers are stepping in. That would support an upside breakout on price and align with the pennant setup. But if the RSI drops below 40, momentum is fading, and we could see a deeper pullback that invalidates the entire pattern. Until one of those triggers prints, we're stuck in wait-and-see mode. And let's be honest, waiting is the hardest part of trading. So, what's actually happening here? According to technical analysts tracking this setup, ZBCN is in a textbook consolidation phase after a strong summer impulse. The pennant structure shows buyers defending rising support, while sellers test their resolve at resistance. The tighter this coils, the bigger the eventual move, either up or down, but the key detail everyone's watching is volume. Breakouts without volume are fakeouts, period. If ZBCN punches through that upper trend line and volume surges, that's your confirmation signal. The measured move to $0.01019 becomes the baseline target, and traders start layering in positions for the ride. But here's my take. The fundamentals are actually doing some heavy lifting here. A lot of pennant patterns fail because there's no substance behind them, just chart geometry and, honestly, a bit of hopium. ZEBEC's different. The Kraken listing removes a massive friction point for US onboarding. The ZebecNET beta ties the token to real-world utility in telecom and payments, and the card-linked buyback creates consistent buy pressure that scales with adoption, not speculation. Those are all demand drivers that most altcoins don't have during consolidation phases. Now, does that guarantee a breakout? Absolutely not. Charts don't care about fundamentals until they do. But if this does break out, there's actual infrastructure supporting the next leg instead of just vibes and Twitter threads. That's rare. And it's exactly why I'm watching this closer than most low-cap alts right now. One well-known crypto trader pointed out that bullish pennants in uptrends have a historical success rate of around 70% when confirmed with volume. That's not a coin flip, it's a probabilistic edge. Combine that with Zebec's product-first approach, and you've got a setup where technical and fundamental catalysts could align at the same time. If that happens, the move could be violent, but let's stay grounded. If ZBCN fails to break the pennant and drops below the lower trend line, the entire pattern invalidates. The 50-day EMA would be the next support to watch, and if that breaks, we're likely heading back toward deeper demand zones. The RSI would probably tag oversold territory, and traders would rotate out until the next setup forms. That's the risk. And in crypto, risk management beats hopium every single time. Alright, that's the full picture on Zebec Network and the ZBCN setup. We've got a bullish pennant coiling, a 163% measured move on the table if it confirms, and a backdrop of real product launches, regulated exchange access, and revenue-driven buybacks. It's one of the more interesting low-cap plays I've seen in a while, and I'll be tracking it closely over the next few weeks. If you want more deep dives like this, check out the video I did last week on altcoin breakout patterns. It's linked up in the cards right now. And as always, drop a comment below. Are you bullish on ZBCN, or do you think this pennant fails? I read every single one, and I love seeing what you all are tracking. Don't forget to like this video, subscribe if you haven't already, and turn on notifications so you catch the next breakdown as soon as it drops. I'll see you in the next one. Quick reminder, this is not financial advice. Crypto is volatile, and you can lose money. Always do your own research, manage your risk, and never invest more than you can afford to lose. Trade smart out there.